The head of Japan economics at BofA, or Bank of America Global Research, joining us live from Tokyo with her thoughts. Izumi, it's great to have you on the show. Thank you very much for taking out the time. Let's start off with that move, which would be quite historic, so to speak. How much of that could have an impact on sentiment, investor sentiment in the region?
Well, I have to be clear. First of all, the logic for that call was that as we head in towards the later in the year, that COVID uncertainties to the economy would be subsiding, and that this would, coupled with central bank normalization in the rest of the world, including the Fed, would give the Bank of Japan a window of opportunity to deliver its next step in normalization, kind of a one-off policy adjustment to get interest rates settings a little bit back closer to normal and to give a little bit more flexibility for long-end yields to trade. So that was the view. I think in the near term, however, the Bank of Japan, I think, is going to remain very cautious, especially with the developments around Ukraine and the downside risks to the global economy from these developments. So near-term focus will be more on the growth risks. And then if we do get a stabilization, I think we could get the move later in the year.
Growth risks, of course, remain for the region, but also inflation. What is your outlook on that, given what we're seeing with oil prices and, of course, just the world struggle with that variable?
Yeah, so like many other countries, I think what this means is upside risks to Japan's inflation outlook and growth, downside risks to growth. So on inflation, Japan's CPI is currently very, very subdued. It's closer to zero because of some statistical distortions. But we've already been seeing a spread of import-driven inflation, of course, for energy, but also for food items, for which we've seen manufacturers hike prices over the past couple of months. So the current developments in commodity markets should only add pressure. If, for example, Brent sticks at $120 per barrel for the rest of the year, for example, we could actually see Japan's preferred measure of core inflation exceed 2%, and in fact, head towards 2.5, kind of 3%, that kind of range. In terms of growth, the important thing to remember is that Japan is a net energy importer. So a rise in energy prices, especially if it is driven by a supply side shock, which this is going to be a headwind for growth.